got attacked by a pack of dogs. But she said it's okay. I got some wilderness skills beneath my belt. She said she used to be a part of a scout team. They nearly meet her leader one time. But they didn't have enough thread to sew the patches on. She said, you know how you heard about that family that burned down in that house? Well, that was her. She said it was just some hoax that you made up to watch people cry. Yeah, she whispered to me softly. To die by a river. She wanted the tide to come up and drag her away, so that when she's dreaming, she could watch the tree line fall away. She used to draw rainbow faces in the sand. The rainbow made the face sad. Had bits of foam coming out the bottom of its mouth. It's kind of funny that way. What do you want? How I am? Do you need me? Where I stand? Let's go steady. Let's make a plan. Marinate on that for a little while. Hell.
Right, here we go, live US 30. We're in the 30 and macro now. I started the stream a bit late today. So we're on the 30-minute chart here, just having a look at what's going on. You can see we have this 1 hour order block back in here. Okay. Now, I usually label everything. This teal line is the macro premium discount on the daily. You can see we're just seeking the discount now, which is really important inside of PD array, which is this order block, essentially. Now we have the daily previous lows sitting inside this order block right here. They're relatively equal lows, right? So we're waiting for a sweep, but we're running out of dear time here. And the entire week was running out of dear time. And last week, it's probably the worst I've seen the Dow in a long time. And this week. So I made a lot of really nice trades in Asia of last week. Beautiful gold trades. And even a US 30 trade. Because I noticed now, with these last 2 weeks being the way they are, that price stalls, and like the trade that you would logically, or I don't know, for myself, logically get into, they don't come to fruition. They stop dead, consolidate, and then in Asia, they come, stop out the, say, the break even or the displacement gap on the 1 minute, the one gap that it never returned to, and stopping people at a break even and or a stop loss. And then the real move happens in Asia. It only happens about maybe once a week, twice a week, I'm going to say. So it's not continuously like this. So thank God I have my, well, I wouldn't say thank God. I don't really need to trade for a month even. I don't need to trade, but look every day or every week. However, thank God for Asian gold market. I have a really nice strategy that's way simpler than what I do here on the Dow. The Dow is, I don't want to say complicated, because this is like easy shit. There's a 50% on every time frame that price needs to return to a PD array. And if you pay attention to the 50% mark of every time frame, not that you have to mark it in on every time frame, it's just, let me quickly, this might only be an educational live video today, because I don't think we're going to get this price to come down into here and sweep these lows in this macro here. Now, today is the farm employment, the Wednesday ADP, and it's not as seek and destroy. However, you have to watch. So I can extend the macro a little bit later because there's a red folder, and it may just be lagging. It's moving like really, really, really slow, right? Prices. So let's go down to the 1 minute here. Oh, sorry about that, folks. Just trying to figure out why my other monitor is gone now. No longer has my other monitor. Give me a second here. Not really. Well, I do need it. Duplicate this one. Drag it over. Sorry about this, guys. OBS Studio's trash. So if you were trading the NASDAQ, which I don't even want to look at, you'll see that price is not returning to a premium very often, to a discount, sorry, in that case, which it's a bit of an anomaly, and it will eventually. It's just, it's not, in that case, it's actually not offering fair value. It's trash. Like, the market is, what it's doing is it's offering fair value to you because the market makers suck it with a vacuum, basically, with their orders back into a discount to offer fair value. This is why it's unbeknownst to me why there's deniers of ICT training or ICT logic and smart money concepts. Gets almost laughed at on Instagram, which is great because you're just falling for the psyop. Because that's exactly what it is. It's a big giant psyop for you to not know this. And like, I'm not going to get into why ICT himself, why Michael teaches the way he does. He has his own methods. But it's basically all he's really saying is 50% point of interest. You know, there's more to it than that. And this is where you take your entry off of. So, yeah, let's go down to the 1 minute here. And remember, like, this teal line here is macro premium discount. Right, so taking on the daily, the last low to the high on the daily. You can see we've just seeked premium now. Or sorry, discount below the teal line right here where my mouse is. So we kind of need a pool of liquidity. You can see we've tapped this order block here. which, you know, can count to take a trade for sure. Order block within an order block. The trends would have to be up, and the momentum today is pretty heavily down. Okay, here's my 30-minute 200 EMA. I don't want to discuss that too much, it'll confuse you, but it's just basically a trend filter I have right here. We're below it. So the macro trends are up, of course. I'm not saying the trends are down in the macro, just the micro trends are down, which is momentum, heavy momentum down. Okay, so we really want to see this swept right here. This is the daily previous low, the red line. It would be in a deep discount. Well, I mean, it wouldn't be deep, sorry, but it would be in a discount. And it would be good enough for a trade. It's just that we're running out of time. We're now in the 3rd AM macro right here, see? So, and the other macro is completely brutal. This is technically the lunch macro, but it's broken up into 2 parts. There's part A, part B. Part B is the later lunch, which is brutal. I backtest this 3rd macro, and it's great. There's nothing wrong with it. So you can see already what price has done here is come into this 1 hour order block. So this gray box here, right, that we're looking at in here, came shy of the discount and made a move to the upside, pulled back, displaced. Of course, there's no sweep here at all. Okay. And tricked very weak hands in here. And I got into here, you know, came down, stopped you out. Now, I don't know too many people. I guess there's a lot of people out there that might have tried to get into this buy. Like, I don't know, some fair value gap. Oh, look at that, it's inverted. Oh, wow, so what? Inverted. Doesn't give a shit about inversions. Inversions are 4 hour, 1 hour, that's it. They're not an entry criteria. Shouldn't be. It's confluence, but it should never be entry criteria. Inverted fair value gaps. So having said that, we can see we're moving a little faster now. And then you see this order block right here, which is a high probability order block because it's the last down candle, sweeps liquidity to the left, and then the following candle has imbalance inside of it right here. You can see that anybody wanted to take a couple orders off it, bang, bang, you know what I mean? We're stopped out. 1 hour order block, they thought, oh, order block, let's have an order block, bang, 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 stopped out. Like, I was like tempted. No, I wouldn't say I was tempted. But at this point here, I thought, okay, well, the trends are going to shift, and this is just a pullback. And my lagging indicator here, which is my trend filter right here, is just lagging, you know, because pulling back to this order block down in here, and it's just lagging, and the trends are still up. Because technically the 1 hour is still ripping, right? So that's the thing, is if this pulls back, and then my trend continuation model, which is these EMAs right here, flip to an up, I wouldn't have taken it, right? Because that's FOMO. Like, you know that the draw on liquidity is below the teal line, which is the macro premium discount, or a discount. Now, if I was to zoom out and show you this, we'll go back to the half hour. You can see there's liquidity right here, almost equal lows in this order block. It didn't just tap it, like, it's not like an untapped order block. There's liquidity pools sitting in the order block. Discount, no brainer to wait. This is what's nice about the Dow, is that it will offer fair value like this. Now, does it want to go into a deep discount, depending on what the news is, which would be last week's low, right? Sitting below is this daily bullish gap. This is the money trade right here. I would love for the market to come here faster today so I can catch that trade. I hope that makes sense. We're just not basing our emotions on FOMO. If it wants to go, let it go. Right? We'll go back to the 1 minute. And we're going to monitor this red line here. So just bear with me here. Going to step away from the mic and pause it for a minute. All right, we're back here. So in my opinion, market is flat. I haven't bought any trades this week. I mean, we're only Wednesday. And last week was absolutely brutal. I didn't, like I said, it was only in the Asian market that I got trades. So I don't know what exactly is going on, but done a little bit of research on it and can't find too much. I mean, other than that's just the way price goes sometimes. You can see the tech stocks are going crazy, and it has something to do with it for sure, right? But there's absolutely zero correlation between both US 30 and NASDAQ. Like, it's not even the same beast anymore at all. So this is the time when tech stocks explode. And finally, the NASDAQ is doing better than the US 30, even though it's making all-time highs, which is annoying people. I don't know why. It's pulling back sufficiently. Pulling back very deep, albeit. Just having a look at it right now. But you trade the micro range more or less, right? Instead of the daily macro premium. So on the daily, it's not pulling back as much into a discount. You would just use the dealing range, it's called. You guys don't know what the dealing range is? Well, it's really easy. It's this range right here that you're in. Okay, so you just, which is dealing range is usually to the left here. Right, that range right here. 4. The dealing range is to the left, but it also could be, if this price started to come this way now, this would be the dealing range, right? And change depending on market structure shift and starts to trade on this range now. You wouldn't go 2 ranges over, right? It's the range that's pertainable to the where it's trading. So, sorry if this is boring, folks. And most of my live stuff lately has been boring. I don't know, maybe I go live during Asia. Put some comments in the box on that one. I could do that and show my gold strategy, which is money. I don't even want to talk about the win rate on it, because like it's not over amount of years, right, where I've been trading this method. It's only been, back tested for about 3 months, 4 months. It's got an insane win rate. And it doesn't happen every night, fortunately. I'll give you a little clue. It has everything to do with these fair value gap order flow methods that I have written right here. So what we've done here now is tap the 30-minute order block down here. And it's technically seek the discount in here. But the draw on liquidity, like I showed you guys, is down. Daily previous low, equal lows down here. Now, does it want to come short of that? And then like just like sort of like take off? Possible. But the momentum of the trends being down so heavy, momentum down, I just don't see it taking off from here. Look at this 5-minute bearish gap in here. It might want to return to. See, it never has. This is the creation of it here. So like I said, it doesn't look like we're going to get movement in this macro. We're going to get probably this push up here. Like what I'll do is I'll monitor the 4th macro. I'm going to monitor it because you never know. I don't trade past 9:15 a.m. Pacific, 12:15 New York, 12:15 New York, because that last lunch macro goes on like some kind of haywire. I've seen trades work out. And with a red folder, I don't want extending it to the next lunch macro because it's a red folder day, right? But I got so much data of prices doing this afterwards. It's terrible drawing, but okay. The real move happens in Asia, right? And I don't know how long it's going to be that way for. It's not going to be that way forever, right? Like, it's just the way it is right now. So I'll think about going live. I'll start scheduling it in though for Asia. Start to look at that strategy a little deeper. I thought about trying to trade gold in New York as well when we have days like this. But to be honest with you, I just don't like the way gold moves during New York unless it's like early in the morning, the first move. So I would say like the first 45 minutes. And the New York Open doesn't affect as much, but they'll say like from even 6 a.m. on to 7 a.m., 7:15, 7:30 tops. Yeah, I just don't like the way it moves gold during New York. Right now it's on this bearish run. It's making huge like pullbacks to the upside, making it look like it's bullish. And with gold, I have an alert set, right? I'd consider trading New York only if the major lows were getting swept. We'll see. But I think it just runs so smoothly in Asia that why bother trading it in New York? And it moves too in Asia. Like you get a 1 to 2 fast. So we're trying to check buyers right now. US 30, hard to say. I could see that. Trying to trick buyers into this upward move, but it's just coming back to this 5-minute bearish gap. Now let's go look at the 30-minute to see where, if it was to take off from the discount here without sweeping the daily previous lows. We'll have a look at that one more time. Do you know how stupid you would feel if you just got tricked by this buy right here? And this is sitting right here. This is an extreme move up. Like, look at this. There's a lot of, gave two opportunities, which is like, someone saw that right here and went, lots of people are in that buy. So the pool of liquidity is down in here. I know it's tapped the order block. The trends are down too much. The trends were up and it tapped the order block. Heavy trend. Its pullback is too deep. See? It's not pulling back to 50%. There's no PD array below 50%. There's PD array down here. But it's not enough. I need this pool of liquidity swept. So, for example, if this came down and tapped the order block, and the trends were shifted up more, like they were, like my trend filter was up, I would absolutely take it. That's what price does. When it's trending, this is why I pay attention to the trends so heavily, the micro trends. When something's trending, it's going up, it's going back, tapping the order block, up, taps the order block, taps the order block. Sometimes it sweeps the lows on a time frame, right? But it's on fire, it doesn't. This is not on fire, is it? This is a downward momentum. Look, 30-minute order block right here. Boom, this morning, taps it right here. Gone. Seek and destroy. We swept these highs right here last night. Now the market needs orders down here. Doesn't really... The only potential we have right now, and we're running out of time, perhaps I'll pay attention to it in Asia. We'll see. Set an alert. This is the open here. You see this 630 candle here? Look how it came up, swept liquidity, came into a 1 hour bearish gap right here. Order block here. So you can draw that up now. This is like the intraday range because it swept liquidity here. See? You grab that wick, you grab that low. This low potentially could change. See though? Changes too much, you don't want it. 50% here. Wicks into this fair value that it hasn't tapped into yet in the 1 hour, have a sell. That's just a potential thing to mark in on your chart for Asia, but that could change quickly here. Once this daily previous low gets swept, I'd probably ignore that move, right? Depends. We have a red folder, like I was saying today. Sometimes it's just the price is just moving so slow, it's painful. Right? But sometimes the real move is going to happen fast. But I needed to come here first, folks. Like, for all the ITT traders out there that don't really understand a lot of this stuff, they probably would call this a sweep right here. That's the AM low right here. Look. Look, swept it. Oh, it's in a macro. Oh, look, the buy. It's going to happen. Good luck with that. It's not a sweep. This doesn't matter if this is the AM low or not. It came up right to here, see, and then swept it right here. Low, low, low. Not a sweep. Like, look. How's that a sweep? All the highs are just getting lower. Look. It's trending down. Momentum down below this line. There's no sweep there. You're imaginating stuff. I see another guy do that. I'm not going to mention names. It's not a sweep of liquidity. It's trending down. Is it grabbing stops from fools? Sure. If this thing goes right now and just goes and makes all, I don't give two shits. Like, you're gonna get burnt that way over and over and over and over again. Sometimes the market, what they do is it's psychological. They'll want the move to take off on you to be like, oh, next time get in that trade, don't miss trades. So it's either they're tricking you to think the market will take off without you. It's to enhance your FOMO through time. Don't let them enhance your FOMO. Where is the pool of liquidity? The pool of liquidity is here. Does it have to come here? No, it doesn't have to. Absolutely doesn't have to. This is where I'm offering the market. This is where I'm taking my buys. Right? I get 15-hour multiple weeks, which I have many 10 to 15-hour weeks through April. 500-point moves when it's in the right area. So looking at this now, though, okay, what do you see where a potential sell if we trap buyers right now? Okay, we got the weak hands that are in. See how it just comes into the discount by 37 points. Oh, it's in a discount. It's a lot of people. Okay, so price seek the discount here. Now let's get into the buy, right? They called this a sweep. They have this expansion up here. Watch. Expansion into the bullish gap. Pulls up. Oh, we're expanding over these highs. What are we doing? We're enticing buyers to get in. That's what we're doing. Just entice two buyers to get in there. One here, one right here as we're speaking now. Full displacement gap. AM highs, they haven't been swept, but people are going to consider that a sweep right here. Discount down below the teal line here. Okay. Now, it's ADP farm today, which is still a form of seek and destroy in the market. It wants to take both sides. It's not as bad as like Farm Friday itself, Thursday and tomorrow. We have to really watch. It's not as bad a seek and destroy as FOMC's streets seek and destroy both sides. But where I'd be interested right now in trading the fourth macro is, see this 1 hour bearish gap up here? See this displacement candle here? It's come into a couple times and added a few entries in here. I'd like to see price come up in here and sweep these hot. Now, I wouldn't get in based upon calling that a sweep. However, this would be a continuation model. Do you see? It wouldn't quite be 50% of the range. Let's go look at that. We'll go to the 15-minute here. So you'd have, how I do this is see the wick again. Once again, the wick comes higher, sweeps liquidity, so you can use a 6:30 a.m. wick. 6:30 a.m. Low down here, 50% is here. That 1 hour bearish gap is here. It's not quite 50%. This would be the perfect area for price to come into, but it's not going to come that far today at this time, I don't think. Wow, it's only 174 points. Not possible. It's highly unlikely. So let's look at where I have exceptions to the rule, 50% perhaps. You can see as we were coming down, we have sharp displacement here, all the way down. So this fair value gap right here came down, this 1 hour bearish gap, it wasn't there yet, right? It was formed here. on that wick here. Then price moved, then this little thing came blinking up. So someone got in once, twice, potentially, off this bearish gap over here to the left. You see that? Enticing people to get in here, sellers, right? Now we're enticing buyers. This is seek and destroy. We're gonna come up. Now I don't know if we're 100%, but this is like something that I plan my trades out, right? Whether I'm right or I'm wrong, it doesn't matter. I'm planning my trades out. I would potentially, if it didn't come to 50%, which is right here, the range, right? We're looking for that 1 hour bearish gap above us. If it swept these minor buy side liquidity, these equal highs here, because the trends are down, I would accept the sell if there was sharp displacement, though. There would have to be very sharp displacement. And it'd have to be probably a kill shot cross or something. This is an acceptable trade here. And because it doesn't come to 50%, I'd take it at half leverage. Okay? Because like it could come to 50% of their range, which is what it likes to do. But it'll be just enough to get enough buyers in to come and rain on their parade. Because what it wants to do is it wants to rain on everyone's parade. It wants to rain on these sellers up here, and it wants to rain on these buyers down here. That's why people think that they can't win in trading. So the continuation model itself doesn't have to happen in a macro, because the macros for me are designed for a reversal. So it comes down daily previous low in a macro. This is when the institutions buy in a macro. There's just no doubt about the fact that you use these macros for the unicorn silver bullet right here. Continuation can happen anytime between the macros. So I don't really have to cut the stream at all, because this is the end of the macro here. I don't have to cut it. This would be kind of like what the Asia market does once a week, sometimes twice, but mostly once. Is it get sellers in here, now consolidate like this sideways, because I'm telling you, price doesn't move past 9:15 a.m. all the time. It does sometimes, but it's very rare now. And there is a red folder today, so we'll leave that out of the exception. But it will do this. Take a bunch of people, take people this way, that way. Then in Asia, come up into here for the move down, stopping out the people at break even here, or stopping them out here. These sellers right here. Believe me, like this displacement gap is a trap for people, right? Because look, it didn't really let you in anywhere all morning. Where's the open? See the open here? It's back. No displacement gap. It's up. I saw this right here at 7 o'clock. Right? Like this 5-minute bearish gap here. Like, I knew it was coming down into here. I knew it. But I'm not going to take this trade even though I knew it. I knew it only as a theory. How do I know it didn't just sweep this low and was going to go and seek, well, here you can see it seek 15-minute at 6:30 off the open here. Now listen, if this was a 15-minute bearish gap and we were already below this 200 EMA right here, so making the trends down, if I'm convinced the micro trends are down and it pulls into a PD array in the morning, I don't need to come back to 50%. I'll take the sell all day long. It's just not lining up. You know what I mean? Like nothing is lining up this week or last week. And that's just the way she goes. It's the way of the road, bubs. Oops. It's the way of the road. Way of the roadmap to trading to success. Well, there's the kill shot buy. Right? Perfect. Come up into here, give us a kill shot sell. So it won't be a unicorn model in here. Because it probably won't happen in a macro. See what I mean? Now we can extend this now. Fourth AM macro. Which, by the way, like, I go over my trades and I can see where the low-hanging fruit, the losses are. They're in this macro. Just so everybody knows. So, like, if you get into a trade in this macro, don't hope for like 1 to 10s, 1 to 5s, 1 to 4s. Those happen in the morning when the beginning of the 7 a.m. candle, the 4-hour candle, like when that starts, it starts every morning, 7 a.m. New York time, right? That's when you go for your big move. You don't start taking big moves in the fourth macro, right? You just go for your 1 to 2 or relative 1 to 2, 1 to 2.4 or 5, like where an obvious low, short-term high, short-term low would be. You do not try to kill it. Unless it's in a super key area, like down here is a key area. Actually, let's go to the 30-minute, show you a key area. You want to set alerts right here, okay? I don't know if it's even going to come here this week. It would have to pumble, but last week's low right here. That's a key area of holding a trade. Look, daily bullish gap right below it. This is a money trade. This is an options trade right here where you can hold it. Hopefully there's some speed. Now we're going into June now. You can see the market's slow. Way slower. There's still volume in every candle though. Got some pretty high volume candles in here, right? Like it's not bad for June. You see this candle right here. It's one move in a minute. Still moving 42 points per candle. So we got volume still. I don't know for how much longer. Kill shot buy. Kill shot sell. On trend. So the kill shot community might take the sell here. Just because the kill shot came out. Just because the EMA is crossed. Means that's where the price is going. Just because they crossed. Not at all. That's how you get destroyed. It might work. I ain't taking it. You know it's not going to revisit this fair value gap one more time to get more buyers in right here. See? Boom. Fair value gap. Let's, anyone who missed this, let's get a second entry off this fair value gap. No, not my guys, but get more order pools sitting in here now, down in here, right? Entice more buyers, comes up, seeks fair value, stops these people out right here, boom, comes down, stops the buyers out. That is a high probability scenario. When I say it's high probability, it's just high probability. It doesn't mean that's going to happen. How do I know it's high probability? Because I've been watching it happen nonstop for years and years and years. 45 minutes into the stream, and nothing's happened again. Starting to wonder now if this is where it's going to start just lagging for the rest of the day. Looks like price is on the move. So you can see the EMA cross that are about to happen here. It's really close. Low probability if you take this cross on trend. Although this is the draw on liquidity, so it's very possible. Could have got buyers in once, twice, 3 times. And this could be the move right now. But I'm not going to fall for it, whether it works or not. I need this to come up into fair value and take stops out at least, minimum. This will be interesting to see what it does here off the cross. Let's draw that box out once again. See if it's going to entice more buyers in the fair value here, or if it's just going to smash through it and take these daily previous lows now. Whenever the algorithm decides that it has enough buyers trapped in here, it'll go down. It's not good enough for me right here. Didn't do anything. Trading's like rolling a dice on a bunch of different trades. If you were to fall for something like this just because it's on trend, over 100 trades, you're not going to do well. Look at that. Anyone who got into this, all those kill shot guys, they usually do a 25-point stop right there. I just called it exactly like it was right here. Your little trends are down. Your little kill shot came out right here. See that? And you're stopped out right here, 25 points. All right, not quite yet. You're now. See that? Collect more buyers. Fair value gap. Sellers are up here. If it goes down now, it got you. Put your stop loss up here. Potentially 41 points. Either way. All right. I just don't see price moving very fast. I don't see us getting up into here and then reversing, and it's possible. I'm going to cut. I'm going to give it a few more minutes. I don't want to take it too much more than an hour, these live streams, because normally I have to go to my paid Discord. But whatever. For today. We're past the 3rd a.m. macro anyways. I don't do live Discord past 3rd a.m. macro no matter what. Well, I don't expect anyone to sit through too much more stuff like this. We have 66 points only. It's up here. Got this consolidation, the time. I'm gonna call it here, but for all you US 30 traders, pay attention to up here. Okay. Pay attention to down here. Pay attention to this move right here. Because we're not moving fast enough price, there's no point being live on YouTube here with complete still action. But I'll make my point made one more time for the kill shot people here that took random kill shots because they're on trend. Look how I called it's going to collect second buy. That's what we'll stay here for. I said it's going to go back up, come down to the same fair value gap it already tapped into. One more time, I'll repeat myself. Here's where it tapped into it, right here. Came back down, collect more buyers off the same fair value gap. Like, you can't make this shit up that I just called it. Look at it. She's steaming now. Whoa. All right. So let's pay attention to what happens here, and I'll see you tomorrow. Second AM macro, which is the drawing a blank here. Oh, 10:45 a.m. tomorrow. So it'll start at 10:30 New York time, 7:30 Pacific time. Here on the Secret Life of Pips. It's been no killing it this week yet, but we can't stop and we won't stop killing it.